So I did record a little intro, just like introducing you
Oh,
before
okay. All right.
previously.
Does it have some like epic music and
It does,
everything?
yeah.
All right.
Yeah.
All right. Okay. Very good. Very good.
Hello, and welcome to the Trading Hub's first ever podcast. Join our Discord in the link below. Today I'm talking to Assim, who trades for a number of clients and prop accounts with the goal of going full time in the not too distant future. So, do you want to go straight into it?
Yeah, let's go. Let's
Yeah,
let's let's.
okay. So, what made you first start Forex trading?
Oh well, the thing was, it just kind of happened a bit out of the blue. A friend of mine, a close friend of mine, his cousin um drove a Ferrari, and my brother kind of knew both of them, and I asked my brother, "Oh, well, what does he do?" And he's like, "Oh yeah, he does trading." And I was like, "All right, does he work for a company?" He goes, "No, no, he just does it by himself." So this was the first time, I mean, I realized that the people could just trade by themselves, and you wouldn't have to be in a bank or an institution. So that's what kind of got me into exploring the markets. Then I started
Mm-hmm.
off looking into stocks. That was where I kicked off things, and opened my first sort of trading platform, and messed around looking at stocks, and slowly from there, I moved into, I did some research, what other things you could trade, and I found Forex. And then I started to get into Forex, and I was mixing between the two, trading stocks, trading Forex, trading both as well. But I find for myself that Forex was just kind of, it just made me, it was way more interesting for me. So I started to look a bit more into it. I did some like online courses and was in some trade rooms. And yeah, that's basically how I got in, because I didn't think that people like like us, like retailers, could actually trade, um unless you were in a bank or an institution.
Yeah. That's good that you saw it firsthand, though. That your cousin was driving that Ferrari, was it?
Yeah, I
Yeah.
mean, I was like, wow, I mean, I'm in the wrong job right now. That's where the money is. I was always interested in, all through my school life, and I was always interested in making money. And it wasn't that I was ever, like my background isn't from a wealthy family. We're just middle class, working class
Mm-hmm.
family. But I always had this desire of making money, and it wasn't like that I was I didn't need anything. It's just the appeal of making money. I live comfortably right now. I have a pretty good job, but it's
Yeah.
not that I need more money to live. It's just the concept of making money using your brain that really intrigued me. And at school, what I started to do, I was literally like started to study casino games like roulette. I know obviously roulette is not, it's not favorable. The odds are against the human. But I was in my in my sort of study areas. I was working out, just sitting with a roulette, sort of the numbers, and working out, okay, where can I place these bets to make it as close as favorable to me, or the higher percentage. I mean, if you don't win as much,
So was that
but
before your cousin had the Lamborghini that you were
yeah, yeah.
playing around with poker?
Sorry, this is when I was at school. This is kind
Right.
of the idea of me interested in making money.
Yeah.
And so I was just like, oh well, I've got a 66% chance of this, getting some money, and that's good enough. And all through my school life, I was like that, trying to find other ways of making money. And then I kind of stumbled into poker a little bit, tried my hand at, and then kind of got into blackjack and sort of card counting, and it was always something to do with mathematical. Everything was like, if the numbers are in, if you can put the percentages in your favor, or the numbers make sense, I want to be involved in that. You know
Mm-hmm.
what I mean? It wasn't pure like, I'm just going to go and have a gamble. So, and then when I kind of obviously seen that, oh well, he's trading and he's making money and he's doing this from home, that was it for me. I was like, okay, I need to know about this, because you never really hear too many people who do well playing blackjack or roulette. You know what I mean? But you hear plenty of successful trade stories, if you know what I mean.
Yeah, you do. You do.
And yeah, so that's when I was like, okay, I need to start to really look into this. So I asked some advice of a close friend of mine, but it wasn't him who had the Ferrari, it was his cousin. And he was just like, oh yeah, yeah, no, look up some, he just said, oh, he was told me to look up candlesticks. And I was like, all right. So then I bought uh, the Bible, the candlestick. I don't know who was it. I can't remember the guy's name. Steve Neeson or something, or it's something like that, right? Anyways, I read his book and I thought, right, happy days, I am going to kill the market. Nobody knows about these candlesticks but me. And off I went, and I was like, well, wait a minute, I was like, well, for every one of these ones that works, there's one that doesn't work. You know what I mean? And then that's when I started to go, geez, this is not as easy as I thought it was going to be.
Yeah.
So that was
It's
that
like
was
every
that was
first trader's story, isn't it?
yeah. So that's kind of how I got into it. Like the mental side of my thing was always trying to make more money. But if you said to me, oh, there's something else you can do now that you can make money in with using your brain, I'd be like, oh, tell me about it. That would just interest me straight away.
Yeah.
So that's why it captured me. That's why it was just
So,
like,
what
wow,
was your
okay, I
job
need to
previously?
sort of get this.
Yeah.
Also, airline pilot. So I still fly at the minute, but I'm not doing too much.
So you're on furlough at the moment, which is a perfect time to trade, really, because you got all that free time.
Exactly. But the thing was, again, it was the desire of money. Not like, I don't want to sound like greedy or anything like that. It's just like, when you grow up in a family that they're my parents came from Pakistan, okay, so, and they worked in the markets, and me and my brother used to go with them, and we were there 5 years old, 6 years old, in the freezing cold, getting up at 6 a.m., and it's pure manual labor, you know what I mean,
Wow.
while
Yeah.
other kids we felt were at home playing, and we missed out on so much. And we just kind of seen firsthand, like, my parents have come from that sort of background, and I was like, I really don't want that life for myself or my family.
Hmm.
I think that's where the desire came in of, like, trying to make money. You know what I mean? Like, I don't want to have my kids go through that same scenario as I did.
I do. Yeah, and it's great
So
that you've been able to achieve that.
yeah, and that's what the whole thing with, I became a pilot, so I researched jobs that, paid the most. It was
Yeah.
simple as that. And I was like, okay, yeah, oh, pilot, that sounds pretty interesting. I'll do that, and I kind of put all my focus into becoming a pilot. And then obviously you soon find out that there's a lot of cost in training, and you don't really start earning decent money until you're good maybe 8, 10 years into the industry.
Hmm.
So, but yeah, I mean that was my job. But again, I soon realized once I was in there, the amount of money that had to be invested to get there. Um, but yeah, that's my job at the minute. But I'm looking, I'm obviously pushing this Forex thing quite a bit right now, and I'm hoping in the next few years, maybe a year, depending on funding, that I just go full time and just stop flying.
Sounds good. So let's go back to when you were learning to trade forex.
Yeah,
It's quite a rough road, you could say, for a learner because there's so much rubbish on the internet and so many books out there. It's like, where do you start? So where
yeah.
did you start when you were learning?
So I did exactly what everybody else did, and look on YouTube, and try different strategies on YouTube. I was and I don't want to mention their name because I don't want to give them any advertisement because I don't think they're that good.
Okay.
But there was like an online sort of like trade room, and I joined it, and there was a guy doing Forex in the morning. So, that kind of was good alongside everything else that I was doing. I was kind of watching what he was doing. But the thing was, you see this guy trading each day, and like sometimes he's making money, sometimes he's not, and you're slowly seeing his balance decrease over time, and you're like, oh, why am I following this guy?
Hmm.
You know what I mean? Like, he's not making money, and yet we're all blindly following him. Like that makes us really stupid, you know. And but I started like everybody else, you know. I the first thing was, oh, what books do I get, you know? And then I looked on the internet, every YouTube video, finding out different strategies, trying them, and so on and so on. And it was the same story over and over again. You try something for a week or two, 3 weeks, it works, and then boom, you crash. Same again, repeat, 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 repeat. And to the point where I got fed up. I didn't lose too much money at the start. You know, it was, you know, minimal, but I got the bug, and I knew this is what I wanted to do. So I said to myself, well, you know what, I might pay for some coaching or mentoring, because I had put some money aside. I always wanted to go back to university and do something else once I felt like, you know, you know, you get to a point in the flying career that you really can't do anymore. You know, you get to a certain level, you're there, and that's it for the next 20 years. So I had got to that point, and I was like, well, I want to do something else. And I was like, okay, I might go back to university. And then I, you know, picked up the trading. I was like, well, I might go for mentoring, right? So obviously I was trading for Blue FX for a while, and on came, and they had like a free webinar,
Okay.
and I was not going to even watch this webinar because I just looked at this guy, and you know, you have this perception of traders when you start, you know, when you start into this, when you start into the industry, and you think the people are all wearing suits and things like that. You know, you have this image,
Mm.
but they were, and this became my first mentor, a guy called Patrick Reed, and he was there with like a denim jacket on, like that was the, and I was like, who, this guy is not, you know what I mean? It's just a, I was like, this guy's a trader, like, you know, what the hell? Anyways, I was like, you know what, I'll give it a go. You know, you shouldn't judge people by their looks and stuff. So, and then off it started. I was like, oh my god, this guy's a genius. Like he knows what he's talking about. Because what happened was during the webinar, he called out this level on the dollar yen. Right, I just never forget this. He goes, yeah, if that dollar yen hits that, just buy it. And lo and behold, it hit that like within the next day, and it went up 100 points. And I was like,
Wow.
okay, yeah. I was like, wait, who is this guy? You know, I need to get in touch. So I got in touch with Patrick, and yeah, I started with his lessons, and that's when it really started to be like, I really do not know anything. You know, I really felt completely out of my depth when I met Patrick, and the questions that he was asking me about the market, and I was like, don't know. You know what I mean? So then I realized the YouTube thing was just rubbish. That the stuff that on there is really not great, you know, because it was, you know, Patrick started bringing in things like, you know, I was trading off short time, like, you know, low time frames, like 1 minute, 5 minute charts. And then, you know, Patrick was like, I just started laughing. He's like, okay, we're going to be analyzing on the daily and working with hourly charts. And I was like, okay, wow. And you have to understand that going from that extreme, from trading low time frame to higher time frame, is a big change. Like, you know, when you're used to sort of like in and out of trades, doing like 20, 30 trades a day, to doing one or two,
Yeah.
it takes a long
Very
time to
different.
get out of it. Sorry,
Uh,
one?
Very different. I mean, every aspect of it is different. You know, your technical analysis, you're looking at stronger levels, you're looking at different fundamental news. You
Exactly.
what's
You know, and I didn't even know what fundamentals were. You know, I had no clue. I was like, thought fundamentals was that the economic calendar. That's not fun. You know, that's just economic data. You
Yeah,
know, but you know, now that we know what fundamentals are, then you know we use that to make decisions. But it was crazy, and like I always remember. I like mentors who are quite hard with me because it makes me work harder. And I remember one time, I think he got a little bit annoyed. I think I mentioned something. He's like, "Look, Asim, you paid me to teach you, you know, like this." And I was like, "Okay." So I just shut up then, and then I kind of worked hard with it. And he was really good. I mean, um, he really started. You know, I went from basically not making money to break even. Okay, that's the level he took me to,
that's good. Yeah.
which for me was like massive plus. And then um, what happened was Patrick was doing this thing called sort of like a weekly review. I think the name was, and it was like every week he would do an hour-long video that he would send out to people who would, pay for the service, and he would talk about what's happened in the markets the week before and what potentially is going to be driving next week and some of his trades. Okay, and so obviously as I finished sort of my mentorship, I was sort of breaking even, and I thought, okay, I probably still need a little bit of help. And so I started watching these, and then on the end of the and in one of the videos there was my next mentor who I paid for some extra coaching, a guy called Beat Nussbaumer. Now this guy at the end of the video, they kind of said, well, Patrick said, "Oh, Beat, do you want to let people know about your service?" And Beat was like, "Well, yeah, he said he has these, he has his thoughts and charts that he sends out. So, and he gives a week free." I thought to myself, okay, brilliant. Now let's see what BS all about. If it's a week free, off we go. And so yeah, I got in touch with him on LinkedIn, and I said to Beat, oh look, I would like to try this, and he goes, okay, no problem. I'll send you out the emails. I remember going to work. I had sent him a message just before driving, and by the time I got to the airport, he was like, okay, I'm sending this stuff now. Just be wary that I do send out a lot of emails. And I was like, yeah, okay, there were like 5 emails. 35 emails had just come through my inbox. And I was like, okay, wow, right. And this is the thing. And I was like, wow, this is like gold mine. And if you looked, because the thing was, I did a bit of research on Beat before I got in touch with them, and Beat worked in likes of Goldman Sachs, Morgan Stanley, UBS, everything. And he was just like, this is a guy I need to know things from.
Yeah, definitely.
And so I was instantly hooked onto what he was talking about. He had this thing called 2 cents. So his 2 cents are his thoughts on the market, his ideas, and he's pretty much bang on all the time about the of his views of the market. And so when I met Beat, and this is not no disrespect to Patrick, I think Beat took me to the next level. Like that was basically from going to break even to making money and doing well. And then the thing with Beat had like a 20-minute chat before, and Beat just goes, okay, well, we're gonna have he kind of like assessed me in that 20 minute and to see what my level was at. And he goes, okay, you're fine with the technicals, because I mean Patrick was a very good technical trader. So he kind of went through like head and shoulders and all this kind of stuff and flags and blah blah blah. And he goes, you need to work on your fundamental macro stuff. And then Beat's lessons were from 9 a.m. to 5 p.m. and it was just macro filled. My head was so sore, but it really felt I learned a lot from him. The thing was that I realized when I'm talking to both Patrick and Beat is how much more you need to put into this than just some videos on YouTube. Like some strategy on YouTube, or when this crossovers or this touches this, you get into a trade. Like, yes, that could work, but it didn't work for me. And Beat always said one thing to me. He was asking, you can only be honest with yourself. Look at yourself in the mirror and be honest with yourself. Are you making money? Yes or no? And if you're not, then why are you doing what you're doing continuously? And that stuck with me all the time. Whenever and that's why I said this to people all the time. Well, look, you can only know yourself if you're making money. Like if you're gonna kid yourself, you're only gonna lose money. Nobody else cares. People are there to help you. But if you're just gonna be like, oh yeah, well I learned this strategy and I spent 2 months of my life learning it, and then you're not making money, but then you're kind of ashamed of that, then you're gonna continuously lose money. So that was my sort of like, a little bit, obviously we went a little bit off tangent there, but that's kind of how where I realized that YouTube was, and those stuff on the internet is just scratching the surface, really. And then, I mean, I'm sure there's guys who do well from get those strategies, but again, I was just honest with myself. I wasn't, and this is what I needed. So for me, it's like whatever I need to get myself in the best position to make money in trading, I'm going to do that. So, and then I got some lessons with Beat. I didn't get as many lessons with Beat. I got a bit more with Patrick, because Patrick really was shifting me from like 1 minute chart trading to like 1 hour in daily, and then Beat was like kind of sort of fixing me up, like finessing me a little bit and adding some of his technicals in. But that I didn't stop there with Beat. Beat had this like his email service I stuck with, and now it's a Slack one, and I still use it because the thing is, it's at the first 6 7 months it was like a comfort blanket for me, because I just followed his trades pretty much exactly as he was doing it, because you got to remember there's nobody there to correct your mistakes normally when you're learning strategies, or let's say something happens and you don't know why, at least there's a guy there. Sometimes if he knows, it's like, oh well, this has happened because of X, Y, or Z, you can go, oh okay. So following a guy right through what he's doing, um, for the 6 7 months, and then that's when it all started to click.
A lot of traders are working full-time jobs, and I assume you was at the time. How are you fitting it all in?
What's lucky for me with flying is we're quite busy in the weekends. With the company I work for, we're quite busy in the weekends, and during the week we're not so busy. And even it's not like a normal shift pattern. So you either work earlies or lates.
Oh,
So
okay.
if I'm working earlies, I'm up at 4 a.m. in the morning, and by the time I land somewhere, it's just to kick off the London session.
Yeah.
So I can always check what's going on when I land somewhere, and when I come back, it's just the start of the New York session. So I kind of can do a little bit there. Or the opposite of that is I fly on late, and that I normally flying in the start of the London and the New York session. So I've got the whole morning session. So for me, it's not the same as somebody working some like a 9 to 5 job. They would miss both sessions really. Um,
Okay, so the advice I would give to guys working full time is to use like an alerting system. I'm not really a fan of limit orders, and the reason for that is because let's say you've got a level that you like, okay, and you set a limit order. However, there could be some fundamental news or that spikes the market, and you could hit your level and be stopped out before you before you even know it. So I much prefer having alerts. So you can get these alert systems through TradingView or IG or whatever. Um, and when when you get alerted, I will look at what how the prices got there. So if it's, let's say, imagine it's a big spike, I will go and read what's happened, and then if I kind of think, okay, this story has legs, I'll probably not take that trade. Then I'll wait for the next level, um, or I'll maybe wait a few days before getting in a trade. If I feel like it's a kind of like a buy the rumor, sell the fact type thing, then I might sell off that level. But these things are preparing require preparation beforehand. So, if you're kind of working Monday to Friday, all day, do the work when you get back from do the work on your charts when you get back from work. If you've got an hour or two, and see what's happened in the markets, what you should be doing. You should be catching up with what's going on, um, and then have your alert set up, and then I wouldn't say you would get all of them, because you might get an alert while you're asleep, but you'll get most of them. If something happens during the day, even if you're at work, you might get a message that, okay, euro pound is at 90, or sorry, point 0.9, and you want to get involved. So that's one of the things that I would say that is quite important. Also, trading of higher time frames. If you're working um like 9 to 5 job, intraday trading is just not going to happen. So stick to sort of higher time frame, working off daily charts, and swing trading.
or look at nothing. When you get back from work, have a read for an hour or half an hour and see what's going on in the markets, what moves have happened. Because sometimes, in fact, going to work is good, because what will happen is the move will already happened, and obviously we'll probably go into the fact that I'm a very counter trend trader, right? So we need when sometimes it's better just to not see the move happen and then sort of pick it up when it's all finished at the end of the day. You know what I mean? Because when it's happening in real time, you're like, oh, there's a level, I'm going to take a trade. But maybe, and I've seen this sometimes happen, is when I'm at work, I've come back and it's maybe gone maybe 2 or 3 levels even further.
And also mentally as well, you're not checking it every 5 minutes because you're
Yeah,
working.
yeah, exactly. So that's something that was something that happened a lot of times. Sometimes where I land somewhere and my target area was maybe like 80 points, and then it's gone 150 points. These things happen because
Mm.
you're not monitoring the screens. I'm talking about the good side of things. Obviously, the opposite can happen, but sometimes missing out on a trade might actually be beneficial because you might want to take something at a level, but there's maybe a better level higher up or lower down, and you might get there just by not being on the screen and you're at work. So I think it all kind of evens out in a certain extent. I don't think, or if you really, what you also could do is set limit orders. So say if you've got certain levels in your mind, if you're working 9 to 5, you could sit on your weekends and look at your charts. If you like, say, a euro dollar short, some limit orders on in some levels of the euro, and if it gets triggered, it gets triggered. If it doesn't, it doesn't. You know?
What advice would you give to the new and upcoming traders who couldn't afford like a mentorship?
Yeah. So this is a tough one because it's one of those things. It's like, yeah, we all. It's all nice to have a mentor, but they are costly. There is obviously a lot of information online, which is good, and it's not so good as well. I would say, stick to good professional websites. Okay, so one I don't mind advertising. It's called Forex Live. Okay, so when you go on there, there's an education section there, and they have some real good detailed stuff. There's some fundamental stuff in there. Um, Trading psychology, technical analysis. I would pretty much say if you could go through that website and read their headlines, you're going to be in a pretty good place, and it's all free. The thing is, those guys, when you read anything on that website, they go into the fundamental backgrounds as well as some technical pictures. So and how they combine the technicals with the fundamentals. So that would be my advice: is go to that website, do the education there. I know a lot of people use these baby pips, which is fine. I mean, it's again a scratching the surface thing, but I really do think these guys at Forex Live are very, very good. They very, very helpful, and the stuff they put on there is very, very good, and I read it every day as well. So I would suggest doing that. And obviously, a lot of people have met me through streaming online. I mean, if you find a trader that you like and you've seen him streaming online, just follow him or ask him questions. Find somebody who's doing well and ask questions. If he's willing to give information, then take that from that. There is other avenues, and what you'll probably find is, yes, these mentors are expensive, but you might just find a guy who'll be willing to teach you for probably quite cheap as well.
I think the hard thing is for a new trader is just getting those contacts in the first place because there's so many new people, and often the successful ones, well, they're successful. Why would they bother teaching a new person? They're making the
Yeah.
money.
That is very true, and I suppose that's why the rates of the good guys are probably quite high because
Yeah.
it needs to be worthwhile for them. Um, you know what I mean? Like, B again, it wasn't that cheap, and neither was Patrick, but the information was really, really good.
Hmm.
But obviously, I understand. This whole thing was like, well, why teach when you're making so much money? Well, the reason why people teach, I mean, is because a lot of these guys don't trade their own capital, or they only trade part of their capital. They maybe have investors, okay, and so these investors, and then you make a couple of percent a month, and then you only get like a fifth or 20% of that. It comes to like it's not as much money as you might think. And so if you got a student who'll pay you 5 grand up front or whatever, or 3 grand or whatever it is, it's money.
As opposed to, and
Um,
it's not really too
but
much work for them either.
no, it's not. The thing is like, well, it the thing is when you start to mentor somebody, you start to feel a bit. responsible for them, I think. You feel like if they don't do well, it's because of yourself. You maybe haven't taught them well or whatever else. But it's a time factor because that's why I don't really teach anybody because I don't have the time to teach. I'm too busy with the markets. You know what I mean?
Yeah.
And then I've got to spend time with my family. I have other interests that I want to that I have to entertain. So I don't have time to sit and every day be focused in teaching somebody, even though the money could be okay. But it's a time factor as well. A lot of these guys won't teach because after their day, I'm sure they don't want to be sitting for 3 hours with another student, you know. But
Hmm.
the cheapest way for me is that website I've mentioned, Forex Live, very, very good. There's a lot of stuff there, and you have to be committed to learning. I mean, it's a very simple thing. I remember a few guys on the stream came on, and let's say there's a headline about bonds, right? And maybe you've never heard of what are bonds. Go and do the research because this is literally how mentorship sometimes works. It's like, okay, go and they might say to you. I remember Patrick was like, okay, Asim, I want you to go and tell me about yield curves. That's your homework. And then I'd go and research about yield curves. But if Forex Live put up a sort of a headline about bonds or whatever, and you don't understand bonds, just go and search them, and there's plenty of information there. Because that's basically the work that I did under them, but they just told me where to go straight away. Whereas you might have to wait for a headline to kind of know about that. You know what I mean?
I do, yeah. There's a real
Yeah.
sort of dedication you have to put in.
Absolutely, absolutely. And I always say to people, if there's anything you don't understand on that website, or there's something that they're talking about you don't understand, go and research it because that is your homework then. And then when you understand why that matters, then next time when something like that happens, you'll be like, oh, okay, now that makes sense. You
If you're a
know,
new trader and there's something you don't understand, just go and research it. Don't just ignore it. It is important that you research it and understand it because if that headline comes up again, you need to be ready for the response of the market.
yeah, exactly, exactly. And if they're talking about, oh yeah, the 10 years are coming off, and you're like, well, what does that mean? What does that mean? Let's say you wanted to buy. Here's an example. Let's say you wanted to buy the dollar yen, okay, and now you're hearing headlines about about bonds or the drop, the 10 years dropping, the 10 years dropping. You wouldn't buy the dollar yen if you knew what the correlation was. Generally speaking,
Mm.
you wouldn't buy it then. So, or you wouldn't buy risk. So that's where the difference comes in. Where you know, yes, the technicals are fine, and yes, they work, but then sometimes knowing these kind of things, like when you hear these like headlines, it might just stop you from taking a trade, and that is why are fundamentals important for me because they stop me from taking trades.
And
They
that
stop
could
me.
be enough to make you in profit, just stopping the odd few trades because of fundamental news.
Yeah, because it's like, okay, I'm not going to buy risk or I'm not going to sell risk because of blah blah blah. Do you remember? Was it on Monday when the vaccine news came out?
Yeah.
Right, market was risk on everything was risk on. We did not touch, or I did not touch the computer until late that evening. There's no point. That's big news. Everything was going up, and I've obviously had some short risk positions, but I wasn't in in any major size. The point is not to push because that's a point where maybe if you had like an EA, right, would just take a trade because it's hit that level or it's hit that level. And if I was a pure technical trader, I would have been, oh well, it's hit that level, I'm just going to sell. But that by hearing that news, you go, you know what, I'm going to wait till this all settles down and then I'm going to act. And that might save you two trades. You understand what I'm saying?
Trading blind is what I like to call it if you're just trading purely off technical.
Yeah, yeah. Because you're not understanding what's going on in the market. At the end of the day, the more information you know, the better position you will be to take a trade.
Absolutely.
So for me, it's like try get everything and try get this understanding sentiment, try understanding fundamental macro pictures, try under technicals, understand everything. It doesn't mean you have to be like an economist or anything like that. No, just have a general idea what this news means. And the only way a beginner can learn this is by reading the headlines and seeing the reactions in the market and being like, okay, this is what's happened. Okay. For example, if Bank of England initially, like, was it about a month ago, we're talking about negative rates, pound sold off, right? Now, if you'd never heard about negative rates and you were just, you were just new in the market, like, what, and you see the pound dropping, and you were like, what's happening? What's happening? Oh, some news in the pound. Yeah, don't just say, oh, some news in the pound. Go and research that news and go find out what are interest rates, how do they affect the currency, why is it sold off because of negative rates, and so on and so on. Do you understand what I'm saying?
Mm-hmm.
It's
Find what's moving the market.
find what's moving market and why is this happening, and then then you can start to make better decisions. In my opinion, maybe you were thinking about buying the pound, and then you heard negative rates. You're like, oh, happy days, I've just got a better level. But you might go, well, if you read the news, you want to maybe wait.
Yeah.
You might want to wait for better levels.
So for the new viewers here, what is your strategy? How do you trade?
So I have a very discretionary approach to trading. It's it's pretty much, if I like something, I'll take the trade. You know what I mean? There's no sort of idea of like, if this happens, then I must do this, and I must do this. It's pretty much like, I want to be short risk, for example. Okay, for whatever reason I might have, and then I will just go scouting. I will just go looking through the charts to find any pairs that have coming up to good levels that would sort of fit my model of short risk, and I will just take the trade. Okay. Now, the idea is very much counter trends, or buying the dips or selling rallies. So when like I trade levels, so levels require the market to go against to get to those levels, if you know what I mean, to be testing those areas.
Yeah.
You kind of become it's obviously very subjective. What is whether you're a trend or counter trend. That's why I don't really bother too much. Yes, it's counter trend because probably intraday you were going against the market. Okay, but generally what happens is I use the fundamentals to pick a direction, and then I take levels, and I build a position.
So what would
That
you
is my
what would you
one.
describe your percentage of technical and fundamentals? Is it 80% fundamentals, 20% technical?
Um, I would kind of say the decision to take a trade is probably quite heavily fundamental side.
Mm-hmm.
Now, that does not mean I just take a trade like at all-time lows, and because I think it's risk off, maybe because I want to be risk off. Um, the technical part comes in where I'm like, well, I look at the levels and be like, I want that level. If I don't get that level, I'm not going to take my normal size. I might take a little bit less if I get like feel a little bit nervous that we're not going to get there. But if I don't know how to quantify it, I would say probably like it'd be close to 50-50, to be honest with you. Um, I mean, there are some technical trades that I take, but most of my trades are based on fundamentals. And the reason why, because my brain is now so programmed to think the way I think about a trade, because you've seen me trade. I don't take too many trades per month,
No.
but I might trade one pair or two pairs multiple times. Okay, so um, I have to satisfy my brain that the reason I'm taking this trade makes sense to me, and then I can feel happy in the trade. So yes, this sounds a bit like, oh, you hear the stories, oh, I don't get married to a trade. I kind of get married to it, okay, because I have my thoughts. But if I get married to the trade, this might be a bit like against what people think, but it helps me to stay in the trade for longer. Because I don't go looking around for other trades. I don't care if there's something else that's going on. I'm just so focused on this one and what I'm going to do with this one. Okay, so and that's why I don't take too many trades. I'll make it I'll make it work one way or the other. I'll get out scratch. I'll either get out as a scratch trade, or I'll try and make some money out of it. But it has to be I have to be mentally happy with the trade. And for example, you've seen sometimes in the stream people be calling out trades like, oh yeah, yeah, that there, and it looks fine. But it's not fine for me. For some fundamental reasons, I might be like, oh, I don't want to be short the point, even though it looks good. Because I know if I took that trade and my mentality was I want to be long pound and buy pound on dips, and if I shorted the pound at that time and it went up, it would annoy me more. So for me, it's about keeping me as mentally stable as possible. And what I find that I'm in like sort of like clarity in my brain. Like I'm happy with my reasoning behind the trade,
So do you
and I
have any
want to
set rules before you make a trade? Or it's just like, as long as you're happy mentally that this could
yeah,
work, it's just kind of
yeah,
natural to you.
that's it. Yeah, pretty much that. It's like, well, you know, you gotta think some, I the reason why I trade small sometimes is just to give me information. People like, oh, why you take that small trade? That gives me a lot of information. So, for example, let's say I have whatever reason I want to buy pound on dips, okay? And I buy the pound drops. There's information to me that it's not going higher. Okay, I might not even be at a level or anything. It might just be a random trade. But because the trade's small
Mm.
and I've got the pound, basically, you've got the pound, you walk away from the computer, you come back 4 hours later, it's dropped 30 ticks. That's information. If it goes up, fine, you made money. So, happy days. But if it's come off, there's some information, there's some selling going on in the market, okay? You might then go and research why we're selling in, why is the pound being sold off now? And then you might go and read, oh yeah, there was, some talk about rates, or there was some negative Brexit headline, blah, blah, blah. So by sometimes taking a small trade can give you a lot of information. And that, but then I'm happy if I'm in a trade that's sort of like fits my sort of mental model, or
Mm.
on that pair. I don't care which way it goes. If it goes up, I make. Or if it goes in my direction that I want it to, I'll make money. If it goes against me, it'll give me information of when do I add into the trade. You understand what I'm saying?
I do, yeah. So
Yeah,
your trading strategy has a lot of drawdown. Well, I say drawdown, but you might be down 3 or 4% of your account at a
yeah,
time, and when you're
yeah.
trading a big account, that's quite a lot of money. How do you deal with that?
I have no concept of money. Like I think in percentages at all times. I don't even think about the money. For example, I've had that BlueFX account. I've had a 100K account, and I've been down 4 grand, 5 grand, which is a lot of money,
Hmm.
but it's 4 or 5%. So, and that's why I always talk in terms of percentage rather than in money terms, because I just don't think you can think about it in terms of money. You have to always remind yourself, what is that as a percentage? So
What
if
about
you think, oh
what
my
about the
God,
first?
I'm down $500,
Yeah.
and it's like a 10 grand account, it's like, well, that's hardly anything. You know what I mean?
What about the first time where you were down, say, 5%, and it was 5 grand? Surely you must have felt quite scared at that point, or was you just trained so well that
No,
you
no.
just.
At the start, again, it was all the wrong things. I was thinking in terms of money. I was like, oh, I made $200. I'm a genius, or I made 500. The first time I was down 4 or 5K, I was like, that's some money, But then when I thought that, it's not just I'm going to like start to panic. I just think, okay, I'm down 4 or 5 grand. It's a 100K account. That's 4 or 5%. That's fine.
And did
That
you
was it.
manage to get your way out of it?
Yeah,
Yeah.
yeah. But that's what I mean. I completely understand, but we have to stop being P&L traders. Okay, if you want to trade big size and you want to trade large accounts, you have to like start to think in percentages. I think if my advice, but if you ever feel nervous about the P&L, calculate what that is as a percentage. Just get your calculator out and be like, okay, what's that? Okay, that's 4% or 3%. Okay, that's nothing. When you think of that, when you put that number down, even write it down, and you'd be like, well, that's only 3%. That's nothing.
What would your limit be in percentage if you were, say, down twenty
Okay,
percent
so
on
I have certain rules that the way I've set up my risk management is with this new prop uh, fund I'm working with. I have a max drawdown limit of 30%. So I I don't want to see any more than 10 to 12% drawdown, okay? And I work towards a 5%. When I say I work towards 5%, what I'm trying to say, if you look at my data, anytime I've gone to a drawdown, an equity drawdown, it's no more than 5%. So what that tells me is my sizing is correct. Okay. When I start to go over 5%, 6, 7%, I might cut some trades. Okay, because I want to stay below the 10% mark.
Yep.
Okay, so when it starts to get to those levels, I've looked at my charts, I've looked at my equity draw, and this is why it's really, really important to look at your data. I've seen these times where I go into drawdown, I look at them, and it's never really peaked above 5. I think the highest I've ever got to was like 7, I think, and then I think it blipped 7 and it came off. But we're talking single digit stuff here. You know what I mean? Like if you're thinking you're having 5 to 7% drawdowns equity, that's pretty good, compared to like what I've seen other people draw down. But you have to kind of work out a model that, okay, well, what do you want to keep your drawdowns to?
What made you choose that 5% drawdown target?
Well, that kind of came from BlueFX. They have a 10% limit, okay, and I kind of was like, well, I'm good at working 10% because I haven't busted 10%. The thing was, when I started this new fund, I wanted to get as much capital as possible, and one day I was sort of thinking, I was like, if I was an investor and I found a trader, what data would I be looking at? And I would be like, I wouldn't really care too much about the gain. I want to see how much of my money's at risk. Yeah. So, and I've heard numbers like 10 to 15% is okay, and I heard that, but I want to be better. You understand what I'm saying? No, this is another thing that it's a bit of a personality trait with me, is that I always want to be better than everybody else. I'm very, very competitive person. So if somebody has a 10% drawdown, or if a company says, oh, 10%, I want to do it in 5, just to be better. You know what I mean? I don't even want to go near that 10%. So I just came up with that figure because it's like, it's only a sixth of what I'm allowed. It's a sixth of what I'm allowed. I can go down to 30. But if you see a guy who's returned 35% and has a 5% drawdown, that is very, very attractive. Right? You take another case, you've got a guy who's done 30%, has a 10%. So you've got two track records in front of you. Both are very good. Said to you, which one would you take? Would you take the guy with the 30% return, 10% drawdown, and 30% return with the 5% drawdown? You're going to go with the 5% drawdown, aren't you?
Yes, definitely.
Yeah. So the whole the 5% thing is just something that I kind of it's like a challenge to myself, that I'm like, you know what, if I can work, because obviously I don't use stops. Most of the time I don't use stops. So I have to be able to give it a lot of room. So I have to trade small enough. And I have to trade small enough that I won't breach sort of 10% drawdown. And that's why I work towards a 5% drawdown in terms of my trade sizes. Because then if something does happen, I probably won't go above 10 or 15%. If something random, some random a random thing or a random event happened in the market. You know what I mean, like a flash crash or whatever. But in those cases, now, without going too much into it, like I generally use stops for risk on positions. If I have, buying risk, like the likes of dollar yen or Aussie yen, I would definitely have a stop in the system. Or the other time I have a stop in the system is when I max size into my account. So what I mean is, I have a certain limit that I set myself on trade size. So for example, right now I have a 5K, working with like a sort of a 5K account. I don't want to have any more than half a lot of exposure on the account. Okay. Now let's say I'm in half a lot and I'm going in overnight. I might have some stops for a couple of positions.
Whereabouts would you place your stops?
I would keep them pretty tight. I would keep some pretty tight. So what I would normally do is anything that I've added it. Let's say I've added in a trade just at the end of like the London fix or something, okay, around 4 p.m. And the market just sits there the whole day. right, and just doesn't go anywhere further. It just sits in and flags at that level. I might then, and I might be in half a lot, I might there then decide I'll put a stop 20, 30 points away with that just position that I added. Okay? Because remember, I have a strict limit on the account, half a lot. And so if this now goes against me by 30, 40 ticks, I'm going to have to breach that rule of mine. Okay, look, intraday, I don't mind going to 0.6, 0.7 knots. Okay, that's fine. Yeah. But overnight, I don't want to be going into those limits because I'm not there.
Do you find it's hard to get to sleep because you're constantly thinking about the charts and worried that your
I
position could go against you?
No, I don't. I don't have trouble sleeping. I sleep. The problem is I wake up and then I check. So I'll wake up and have a look what's going on. There's times I've just gone up and be like, okay, that looks like, yeah, pretty close to target, close the trade and go back to sleep. You know what I mean?
Mm.
Or I'll be like, okay, well that's at my next level. Or okay, sure, I'll just add some in here. But the thing is, if you're worrying about sleeping and things, you need to have a stop limit. You need to put. I'll know when I feel like I've got too much on the account, and that's why this is all from experience. I used to just keep going. I used to keep adding into trades and keep adding and keep adding and keep adding, and then you end up with like 1 or 1.2 lot, 1.3 lot on a 5K account, and then you kind of think to yourself, well, oh my god, if this moves 40 points, that's going to be another $400, $500. So if you said to yourself, actually, you know what, half a lot max overnight. If I go with half a lot, I'll put some stops in. That's now. There's obviously little caveats that if let's say the position is like there's 2 or 3 positions in profit, I probably wouldn't use a stop. You know what I mean? Let's say they're up 30, 40 points. Well, I mean, I probably would lose the 40 points and maybe some little bit extra, but it's not going to be a big deal.
Mm.
But the idea behind is very much capping the max size, capping the amount of risk on the account. Now you've seen me trade, and you see I very rarely even go towards half a lot. I mean, at max I go by 0.2, 0.3 on that 5K account.
What would
You
you
know,
say is the number one most important thing for trading, when trading?
patience, patience, and money management and risk management. Those 3 things kind of all, they all kind of work in with each other. So the money management, risk management is virtually the same thing, but the patience thing, I see a lot of people want to get into trades. They always want to be like, they have this idea is like, in and out of the market's going to make you money. No, because that may work for some people, but quantity is not going to guarantee you more money. As human beings, we're used to like um, doing work and getting paid. Yeah. So if you work 5 hours and you get paid some money, you work 7 hours, you get paid more money.
Mm.
Okay. But trading is completely opposite. You get paid to be more and more patient and do nothing. It's a really weird thing to get around your head. Like sitting on your hands is making money because you're going to get to a point where let's say, you want to buy the pound and you just sat. People been like trying to get involved. They're getting cleaned out of the market. And there you go. You're picking off the bottom and off you go again. And that's why I draw that's the whole idea of picking levels because you're always picking levels that are like maybe 100 points away, 150 points away. They don't look like it's ever going to get there, but it does. And then you're like, oh, happy days, I've got to my level, boom, sell or buy. And you're picking off trades at really nice areas. And, everybody else is probably cleaner of the market. They were like using tight stops in these areas or trying to scalp. And that just comes from patience and just waiting for those. And you can say to yourself, I'm not going to trade this pair unless that level is hit or unless that level is hit. So you can, what helps is you could go through all your charts and do that and set alerts for yourself. So if a certain level comes active, you'll get an email or a text message, and then you can just go look at the chart, what's going on, and whether I decide to take the trade or not. So I do that sometimes. I do put my orders in. I don't set limit orders, but I put in orders on like on a platform that will give me alerts that the level has come. So that helps with the patience. Okay, that helps with the patience. But the risk management stuff, it's not talked about a lot online. And risk management is the key. All that stuff is key. Mentality is key. Forget everything else. Like if you can get these things right, you'll be in a really good position to make it. A really, really good position to make it. The problem is people have greed. They want to make money too quickly. They think that taking more trades means more money. They want to scalp because they feel like they want to work hard. Like it's like the whole idea of working to make money. You know what I mean? Like that's how we have been brought up is like, okay, you work and you get paid. But in trading, you get work not to be, you get paid not to work, and you just wait and you wait and you wait and you pick your moments and off you go. And I think that's for me is key. The idea we talk about is risk management, and I get a lot of heat about not using stop losses.
I mean, that is quite a shock for a trader, really, because you hear so much use a stop loss, use a stop loss, use a stop loss, and then
Yeah,
you have quite a lot of money in risk and you got no stop loss.
yeah, yeah. Well, the thing is, then what people don't understand. There's other ways of um, managing risk other than using stops. Their position size, max risk on the account. These things all help. These things all help. If you're in with big size, and even obviously, like I've said to you, if I'm in with my max risk on a trade, I have to put a stop in. You know. But if you're nowhere near that size, and you've seen me do this before. I've took a size, and then I went to a level like 300-400 points away, and I look at how much that is, and it's like, oh, that's 2%. You know, I'm happy with that. And I mean, if a market goes against 400 points against me, and I've only risked 2%, I think that's okay. It's not going to hurt me in any way.
Mm.
But there's nothing wrong with using stops. But what people have to use stops because they may be in a little bit more size. They can't afford to risk anything more than maybe 1 or 2%, because they're probably in the market a lot more than I am. You know, um, we talked about my trade last week. I was down 4%, but that 4% was over two weeks of an equity drawdown over 2 weeks. There's people who risk 1% per trade per day, and they might take 3 trades, so they might risk 3% a day. It doesn't mean like, okay, yes, they might lose some, they might win some, but let's say, for example, they have 3 losing days and they take 3 trades and lose 3%, so that's 9% they've lost in 3 days, and they're happy because they've risked 1% per day, right? But I've risked 5% over a space of 2 weeks.
It's just thinking differently, I suppose.
Isn't
A
it?
lot of people
It's
don't
just a,
really
it's just a
see it like
mental
that.
thing. It's just a mental thing because I'm trading small over a longer time period. It's just different. You don't, and when you put the numbers like that, people start to go, oh yeah, that kind of makes sense. Over 2 weeks you've risked 5%. But if you tell somebody I risk 5% per trade, they're like, oh my god, that's too much and blah blah blah. No, have you asked any other questions about how long I'm holding the trade for?
Mm.
So there's other factors that are important there that you need to think about. Like it's not just about, of course, if you've got that style, you're trading off like small time frames, you have to use a stop because the movements are going to be too much. You might only want to risk 5 or 10 ticks. Okay, but for me that doesn't work for my strategy. I can't risk 5-10 ticks. I'll never make any money. So it's all a mental thing, and again, it's about wherever you feel comfortable mentally, and that's what makes me feel comfortable. I don't mind not using stops, but I also know that I could risk 4 or 5% over maybe 3 weeks, maybe a month. But if I was taking a trade every day, I'd be risking a lot more. If you think worst case scenario, if you're risking 1% a trade per day, and you lost five days in a row, you could be down 10%, 12%. But you're happy because you only risked 1% per trade. That's what the book
It makes
says.
sense.
You know what I mean?
Yeah.
So there's other ways to managing risk than just, oh yeah, have a stop loss and that's the end of it. That's not, that's not the. I don't think that's the right way to think.
So, changing topic a bit now. Could you tell the viewers about the story with your trade on the plane?
The what? Sorry. Oh, the
Yeah.
big. Oh, the one with the big loss.
Hmm.
Yeah. So this one was. I will never. I think this will be my story that I'll never forget. So what happened was I was, as I mentioned, I was working with Blue Effects, and I was doing really well. I was getting up to the point where I was going to be getting my 200k funding. So I had a 100k book. I left Belfast with around it was up sort of like up to 109k or something it was, and I needed a balance of 115, and then they would give me 200k. So I went over to my brother's wedding in Pakistan, and I was trading over there, and I was doing really well. I think I got my balance up to sort of like 113, 113.5 or something like that. So basically, I needed another 1.5% to get a target. Now, this was a big lesson for me of not setting targets. For some reason, 3 days to go to coming back home, I had this idea in my head. Rather than enjoying the rest of my holiday, which I was really enjoying anyways, um, that wouldn't it be fantastic if I was to land back at Belfast, hit my target, and send them an email saying, I've hit my target. Can I have my 200k, please? And I was like, right, I'm gonna get that, and my brain just was like, I want to get this target. So I started trading. Basically, this was the time when all the banks were cutting their rates during the start of the COVID crisis.
Mm-hmm.
And so it went, and I was down. So it went from like 113.5 down to 112.5, then back to 113, then back. It was just bouncing back and forward, bouncing back and forward. And then we were traveling back the next day, and that's when everything started to go crazy. Like oil was just being sold off crazy. I think I was in like EuroCAD short, and EuroCAD was just rocketing higher. And I was flying back, and I was like, I had to buy the internet on the flight home just so I could manage my trades and stuff. Ended up coming back home. I landed back on the Friday, and I just dropped like 4.5k in the space of like 2 days. And I was like, right, fine, that's a bit of a bummer, right? Anyways, well, I'll manage to get it back. And then what happened was I reopened the positions on Sunday morning, and sorry, Sunday evening on the open, and then we had the crash, the COVID crash, and I got hit throughout that. This is before I kind of like really, I would say, really get a deep understanding of fundamentals. I was kind of more of a technical type trader then.
Mm-hmm.
And that's probably what made me switch a bit more to understand what was going on in the market. And this is why I say, these things are important. And I went on a really bad run. I went from then 108k down to like 92. And at one point my lowest was 90 and a half. So I'd lost like, what's that, about 25k or something, 20k. Not all my money, obviously a lot of that was profit and then some else. But that's how quickly something like having an idea in your head can really like ruin things for you. But as things settled down, I mean, I sent an email in to BlueFX, and they were quite nice. They were like, look, we understand the markets are very, very choppy, because I was obviously then trying to trade it after had the crash, was trading, got a little bit of money back, and then my trading just turned really poor. Wasn't trading well. And every time I'd make I'd be in a position to be up 2k, instead of banking it, I would just like, right, it's going to drop now, and straight back, I'd be up to -0, -1k, -2k, and it was just chipping away at the account like that.
How did you feel when you were down so much money? How did you just keep on going?
I was like, I just kind of devastated, to be honest with you. I think I was more devastated the fact that I got so close to more funding. You know what I mean? And I just was like, for 1.5k, so 1.5%, I basically just went from there all the way right back down, and then into a drawdown in the space of like 2 to 3 weeks. I was like, oh man, it just was like, I can't believe what's just happened. I was more annoyed at myself than the money aspect. The money, again, like I said, the money really didn't matter to me, because I was like, for me, that's like, oh yeah, okay, I've lost like 10%. Okay. But I mean, when I mean I lost 10%, I mean that 10% of the fund's money, not the profit I made and everything like that. Yeah. Is it with the profit? It's more. But I was just annoyed at myself that I let myself kind of, get into this mental zone of hitting this target so much. You know what I mean? And then I kind of was about to just go, you know what, I'm going to take a break, I'm going to stop and blah, blah, blah. And then I sent them an email and they were like, look, Asim, we know that you're a good trader. We've got your data. We will only intervene if your trading behavior changes. And for me, that was kind of like really nice. That was like, okay, they've obviously, um, they kind of recognize this is probably a one-off thing, and it gave me a little bit of a boost of confidence. And then I just started trading, and I got all the money back pretty much, So
That's brilliant. Yeah.
yeah, but the point was that the massive lesson learned was not to set myself any targets anymore, because and actually when I started doing that, I started again trading better. But this is all comes from experience. Everything I've done or any mistakes that I've made, it's just an experience building exercise. It's about how little money you can lose while you're building that experience. Um, when people people look at the data, my data now, it's pretty good, but it was, this is all because of my failures in the past,
So,
and
so you've
sticking to it.
taken.
Don't stop trading. I know people like they trade a bit, they lose money, and they get sort of disheartened and stuff. Just take it as a learning experience. Take it as a learning experience. And what would you do differently next time? And that's when you can start to go, okay, I am not going to do this because last time I screwed myself over. So I've stopped setting myself targets. Yes, obviously, now I trade for people and so on. I have, like I say, I have a 2% target, which is very achievable. But it's, very like, it's not like I'm saying, oh, I'm going to hit 15% or whatever. 2% is very achievable. Anything else is a bonus. But I don't force myself to get any of those numbers. I just trade. Whatever happens, happens. But I've stopped with sort of trying to hit targets. And that's why kind of I've left, well, I'm leaving Blue FX as well. It's because of the target thing.
Did you ever make like a logbook or a diary to track all your like mistakes and learn from them?
No, because I've never been that type of person to write stuff down. Everything is normally just I know in my head, that if I can't do it in my head, then it's there's no point me writing anything down. It's not gonna, it has to be sort of etched in my brain. So you could have some like rules sitting in front of me, and I would what I would be doing for the first hour is like learning the rules and put them in as much of it into my memory as I can. Because for me, it's like as much as I can recall from memory. You know what I'm saying? That's just how my brain works. It's always just like I want to do things instinctively, rather than having to be like, okay, yeah, so I did this wrong that time, blah blah. But now, it is etched in my brain because of what's happened. But I've never kept any diaries or anything. I always keep a track record. I always link my accounts up to some sort of like my FX book or FX Blue or something like that, and I always review it. I always review that because that's statistics, and you're basically your trading CV. For me, there's enough information there. But for my mistakes, I just know them and I just put them in my head. And me writing them down is not going to make a difference whether I remember to do that mistake or not. It has to be sort of in my head.
What would you say for traders who are seeking help?
Oh, I always think like one shouldn't be ashamed of getting a mentor or looking for a mentor. Um, if you really want to do this, and it's a complete desire to do this, like there's nothing wrong with getting somebody to coach you or mentor you. Like don't be like swallow your not yourself, but swallow your pride. Just by somebody teaching you doesn't mean you're a failure. You're just looking for help. Like why would anybody expect that coming into trading you can learn it within 2 weeks, 3 weeks? You look at anything on a professional level. Being a pilot takes a couple of years, a doctor takes 7 years, and so on. So why do people think that like, oh yeah, you can just turn on the and start trading. I know a lot of it's influenced with Instagram and YouTube and so on, but that's why so many people fail, because it's just like everything else. You got to treat it like another professional thing. You have to put the time in. It's going to take you years. It's taken me a good, a year and a half after my mentorship to really sort of now get it. And to the point where now it's really hard to explain my style and so on. So that's how much time minimum that will need to be invested in this. I mean, yes, you're always going to have the exceptional cases that might get it done within 6 months, 3 months, whatever. But I really, really believe that you need to stick at it. Don't give up. If you really want to do this, just keep going and keep going, because you will start to learn from your mistakes, and you will get better. The problem is that people make 1 or 2 mistakes, they blow their account, and they're done, and they don't look back. And then maybe 6 weeks later, they put some more money in, probably do similar mistakes, and then they're done again. Yeah. So don't get disheartened about losses. Losses is part of the game. It's just one of those things that happen in trading. Don't be afraid to get a mentor. If you have the money lying around and you want to get there quickly, then that's probably the best way to do it. And there's people on LinkedIn. I mean, I always say LinkedIn is a good way. There's a professional environment, and look for people's backgrounds and maybe approach somebody there. That's probably the best way to go about it. Other pointers, I would say, like underfunding an account is another big thing that is, people don't have enough money in their accounts, then they try to make, because a lot of people don't understand, because they don't think in terms of percentage. They think, oh, I want to make $200 a month or whatever, and they're starting with like a $500 account. That's not just, that's not, you might do it 1 month, but it's not sustainable. You want to be in this game for as long as you can. And the only way you're going to do that is have a reasonably sized account and have realistic goals. For me, my realistic goals are 2 to 5% per month. I mean, okay, sometimes I do a little bit better. Sometimes it's within that range, but it's a nice target. I don't think, this is going to only make me like $100 or $200. Don't think like that, because it doesn't matter, because as accounts grow, the money will come quicker. If you know what I mean, the money value will come quicker, but you cannot be influenced by P&L. So always think of it in terms of percentage. These things, if you get in these habits early, they're going to help you a lot. One final thing I think is important is there is a lot of strategies out there, and I understand that, but for me, it was about, obviously, before I met Beat and Patrick, I did try out a lot of strategies, counter trend, range, and going with the trend and so on. But I tried them all out and lost money in some of them and made some money in all of them. But what I was able to identify was what kind of mentally suited me. What I felt like, oh, this makes sense. And it was counter trend trading. Like if the market was going up, I wanted to sell it. I wasn't like I want to jump on and buy it. If you see a market going up quickly, do you want to buy it or do you want to sell it? You know what I mean? If you want to buy it, you probably kind of find some sort of plan to do that. If you say, oh, this is going up, I want to sell, you're going to probably want to build a plan around that sort of mentality, because that's what was happening. Every time the market was going up, spiking higher, I was like, I want to sell this. I didn't know where. You understand what I'm saying? And that's when I knew I was kind of very counter trendy or very against the market. And so I was like, right, I'm going to now make a plan around that and see if I can find. And that's whenever I met these guys and they were talking about levels. I never traded levels before, but it made sense then, because market's going up, it's going to probably test some level. It might respect it, it might not, but at least it's some plan. Do you understand what I'm saying? So I would tell everybody, try all three, range, counter, and trend trading. Wherever you find appeals you the most, stick to that, because then you'll be at ease mentally, and just find and just work a strategy around that, work a risk management strategy around it, and just work with that and give it time. And you will, obviously, there'll be times where market conditions change. You might have to change it up a little bit, but just stick with that. I mean, you've seen me. I mean, I never ever buy at the highs or sell at the lows. and that's just a rule that I have. And I don't care if I miss a 100-point move or a 70-point move if it breaks out, because for me, it would be worse if I sold a break and it didn't work. Even if it was 20, 30 ticks, it would annoy me. But that's me. But I understand that about myself. I understand that's a mental thing that I have. But the idea of this trading thing is how well do you know yourself, and how well can you self-analyze? The better you can self-analyze and understand what makes you tick, what makes you relaxed, the better you can become, better trader you can become. Um, and this is like, I've talked about risk management and discipline and patience, but this is also very, very important. Like, you get into that zone mentally where you're 100% happy with what you're doing, and no matter what anybody else says, you can say, if for example, if I said to you, okay, here, go buy the euro dollar, it's good, and you can be like, nah, even though you might say some. You want to get to a point where like no matter who's telling you this, it could be like the best trade in the world, and you can turn around and say no. That's when you know you're there. I think, because it doesn't matter what anybody else does. It's what matters what you're doing. You know what I'm saying? Because you just want to be happy. You don't want to feel like, oh, I lost those 30 points because I followed this guy, because this guy might be wrong this time. You know what I mean?
Also, you could lose a lot of like confidence if you think it's going to go one way and someone says it's going to go the other way, and you go the other way.
Yeah.
You begin to doubt yourself and your decisions.
Yeah, exactly. And this is the thing. And that's why, my style is very discretionary. It's so hard for me to tell anybody what goes through my head. Like, I do some weird stuff at times, and it's so hard to explain, but it makes sense in my head to do this. And but this is what I would say a lot of people should do. So if you were to bring me a trader right now, and like, he's brand new, or he has some experience, I would say, okay, go through these three different styles of the market, try trend trading, try this and try that. Where did you feel happier? What made you feel uncomfortable? And then it'd be like, okay, this makes me feel uncomfortable. Cross it out. Forget about it. Don't even look at it. This one makes me uncomfortable. Okay, cross it out. That one I felt happy with. Right, now focus on that. Put as much information and find ways around trading that as much as you can, and build a strategy around that. But the only way you can do that is by self-analysis, knowing what ticks in your brain. But you can only do that by doing these things. If you understand what I'm saying, you have to go and trial each thing to see how it affects you mentally. And then whenever you can find, oh, I'm at peaks at that one, okay, let's go with that one, and let's build a strategy around there, and see how it goes. Because you want to be trading, for me, like, and that's why I say, like, if I like something, I just take a trade, because I know I'm always going to follow my same sort of ideas. It doesn't bother me, but I'm going to be like, it won't annoy me if it goes down, because I know this has worked for me for so long. So, and this is the style I trade, and I'm happy in that. I'm happy the way I trade. So, it doesn't matter what anybody else says. Don't say, if somebody says, oh, no, yeah, you should have bought the point. Of course, hindsight is brilliant, but in real time, you have to think, that made sense at that time. Okay, happy days. I'm happy with that, and I'm content. And that's a big part of my trading is, am I content with what I've got on? Am I mentally happy? Have you ever heard me be angry on stream, even when I'm in drawdown?
No, I don't think I have. No.
Ever. No, it doesn't bother me. It really doesn't. It has no effect on me, because I am happy with what I'm doing with my positions and so on. And that's what the level I feel people have to get to, is like, no matter what happens, it doesn't matter. You become like immune to it nearly. Of course, you get frustrated at the market. Maybe it's not coming off as much as you thought, and so on and so on. That's going to always happen. But it shouldn't be to the point where you're like, for me, like throwing keyboards at, at your screen, and things like that, blaming things. It's a real sort of like Zen trading, if you want to call it that. Just so in sync with yourself and in your mind, and being happy in that space. And then I think that's when and I think that's when you can really start to be profitable, I think. Yeah.
And you also have to accept failure for some of your trades. You know, it's not the broker, it's not your trading platform. Ultimately, it's your mistake that you've made, and they have to find
Yeah.
what caused it and fix it.
Exactly.
You'll get
Don't stop blaming other people. Like this is another thing. A human brain, like we always look for if you think about it, imagine somebody of your family passes away. You always look for justification, don't you? Like why this
yeah,
happened,
you do.
or something is a failure or something. Why did that happen? Why did that happen? Okay, because that's how our brains work. It's always like looking for reasoning. And I talked about this little circle of doom before. Like you look for a strategy, right? You trade that strategy. Let's say you find something about trend lines, right? You trade trend lines. It works for a couple of days, and then it stops working. Then you will go and you'll see like an ad, or you'll see something else about support resistance lines, and they will talk about how trend lines are rubbish. And then you'll go, oh, well, yeah, that's what happened to me when I traded trend lines. That's my justification for that failure. So I'm happy that trend lines don't work, and then you shift that away. Then you do support and resistance. Same again. It works for a while, then it fails, and then you read somebody else saying, support resistance doesn't work because blah 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 blah. Banks know where you're going to take trades. We use order flow, and you're like, oh, that's justification for that for my failures there. Under the rug. Next one. Do you understand what I'm saying? So the brain always looks for justifications in failure. So, but you have to obviously think that that at that point in time that trade might not work for 100,000, many other reasons. But it's always you cannot blame other people. You cannot blame the broker for like doing whatever. It's yourself. Be content with losing, because the more you content you are with losing, the better a trader you're going to be. Okay, you have to be good at losing and accepting losses. Um, but don't be like that's where the whole sort of strategy jumping strategies happen. It's always that justification of oh well that didn't work. Oh yeah, Forex Guru 345 said because trend lines and banks know that and they always go the opposite direction. Well, that makes sense, so I'm going to go now do what he says, and then the same thing happens there, and then the same thing happens in the next one.
That was the Trading Hub's first ever podcast. If you enjoyed, please make sure to subscribe or follow for more. Big thanks for Assim for joining me on this podcast. So thanks for joining me.
Yeah, no worries, man. Anytime.
Appreciate
Anytime.
it.
All right, dude. Take care.
Thanks, you too. Have a good one.
All right, bye. Bye.